Hi, my name is Sam. I'm the co-founder and CEO of Seedlify. Meet Andy, a committed and hardworking entrepreneur. Andy's business is gaining traction in the market, and some potential huge sales are on the way. To take full advantage of his momentum, Andy needs a little funding to scale operations and fuel his company's growth. But there's only one problem. While our tech ecosystem keeps growing, funding continues to lag, and raising capital remains a constant challenge with a long time frame of 6 to 9 months. Andy's company is just one example of that. Today, the emerging growth capital gap in Canada has reached $1 billion and is growing at an estimated rate of $250 million a year. And that's why we created Seedlify. We're combining two of the most recent disruptions in the online world, crowdfunding and blockchain. As a result, we're inventing a whole new way to invest in early technology companies through royalties and a tokenized investment fund. Seedlify offers anyone from any part of the world the opportunity to invest in early technology companies through our digital token. For companies, Seedlify provides quick access to long-term growth capital up to 3 times their monthly recurring revenue within 4 to 6 weeks. Our no fixed repayment approach means the business is not put under strain. Instead, their payments go up and down based on evolving business and revenue conditions. With a minimum of $10,000 in monthly recurring revenue and a gross margin of 30% from consistent sources of revenue, tech companies like that of Andy can grow on their own terms without giving up equity, board seats, or personal guarantees. Our revenue sharing product has no set interest or payment and matures when a total payback of 1.3 to 2.2 extra principal is received, which is achieved by taking 2 to 10% of their monthly revenue, along an upside participation through warrants. For investors, Seedlify provides the opportunity to earn 15 to 20% returns through markets underserved by mainstream finance. By having direct access to curated deals based on royalties, investors can diversify their portfolio beyond stocks and bonds through crypto assets and earn steady returns with quarterly payments. Our revenue-sharing investment fund is backed by a diversified portfolio of loans in companies that are already operational and generating revenue. All of our loans are backed by a general security and a conditional personal guarantee that kicks in the case of fraud. We have developed a simple model for future profit token distribution through a legal entity called RBF Capital. Investors exchange fiat, Ethereum, Bitcoin, or other cryptocurrencies in exchange for RBF token, which represents a unit of ownership in the fund. We, token owners, will receive 50% of the fund's quarterly profit, and to grow the capital pool without attracting additional investments or issuing new tokens in the market, 30% of the profits will be reinvested back into the fund. Seedlify will retain the remaining 20% as part of a performance fee. This allows the net asset value of the fund and the token price to go over time. Unlike all blockchain tokens, investors can trade it on a secondary market through a peer-to-peer transfer. This makes RBF token one of the world's first revenue-sharing tokens and the only one that contributes to the growth of emerging technology companies. We started Seedlify in Q4 2016, where we focused on building our MVP development team and did a $15,000 friends and family round. As of Q3, we have over 100 early access requests, and we're currently raising $500,000 with $300,000 committed to date. The focus for Q4 of this year and Q1 of next year is to launch our token sale, roll out our business application in beta, and deploy our fund. Today, we would happily announce that our white paper is accessible through our website, seedlify.com, so please check it out. All of this was possible and will be possible because we have a great leadership team in place. Our co-founder, Derek, has over 5 years of experience as a financial risk manager at KPMG and Scotiabank. Derek is also a steering committee member at the Blockchain Risk Research Group at GARP. Our co-founder, Casey, has over 10 years of full-stack development experience, most recently at Shutterstock. And myself, I'm a previous head of product at marketplace lender IU Financial, with over 6 years of experience leading the go-to-market strategy of FinTech products. Technology is just the beginning for us, Seedlify. There are many use cases of tokenizing revenue-sharing investments, such as commercial lending and the new economy like Airbnb-based businesses or Uber-based businesses. So if you're interested in knowing more about what we're doing, or you want to raise awareness about our token sale and investment fund, please come see me after. Thanks for your time.
Great job, Seedlify. All right, judges.
Hi, Sam.
Hey.
Your return seems to be low in terms of risk profile of your potential customers. I mean, return between 1.3 and 2.2x regarding the, low stage of maturity of companies you're targeting as potential customers.
Yeah, so we looked when we positioned the product, we looked at different products out there in the revenue sharing market. So if you look in the States, for example, SAS Capital is a great example of that, or Lighter Capital in Seattle. And when you look at the royalty deals, historically, a lot of them were structured between the 1.3 to 2.2x factor. And we positioned this product as an alternative to going the equity approach, which is even more expensive, going to 10x, 12x. So based on historical products and what's in the market as well, that pricing was the competitive pricing to go through because we plan to expand to the US down the road, and that's what's already in the market. Even our pricing is still a bit higher than what's being priced out there. But our payment term allows that repayment cap, as we call it, to go over 2 to 5 years, that's why the return is 15 to 20%, because your extension is over 2 to 5 years as a loan maturity.
So when is the first initial coin offering expected?
So the plan is to launch our token sale is in February, depending on all the regulation aspects that we're going through. But the token sale will go live in February with the pre-token sale going before that. And then once the token sale is closed within February, the fund will be deployed 2 months after, and the first quarterly remittance would be around July. The details are in the white paper if anyone is interested as well in knowing more about the token sale, so please check it out.
So a question
Go
here.
ahead, Sean.
So just to be clear, maybe I missed it. Thanks for your presentation. The actual participation, the tokens, are fund specific, not project specific.
Yeah. So
yes.
you're buying a token that goes into a fund.
Into the fund.
Exactly.
And the fund decisions are made by Seedlify.
Yeah. So we have our own
100%.
credit decision. Exactly. But we do have the transparency where we expose what kind of businesses we're applying, and people can see how the rates are and the businesses are performing throughout the fund's life.
How do you plan to overcome the securities laws as it relates to your ICO?
So the focus right now is to go through the OSC sandbox and the Canadian regulators. For now, we're staying away from the US because of the recent SEC regulations and going into that market. That is the plan for now, is to have a regulated ICO as well. We've seen a lot of ICOs that are being non-regulated and being launched in a form of equity crowdfunding. As much as we believe in the industry and we believe in the blockchain network, we think there's a lot of scammy ICOs out there that are giving a bad reputation about the whole industry. That's why we're positioning ourselves as an ICO that's going completely towards a fund with a purpose. Seedlify is not taking any of that money. We're not giving it to founders. We're not giving it to advisors, which will kind of help with our case with the regulators, considering it's tokenizing a security fund, and which is a path we believe it's going to go down the road. A lot of tokenization of the security is happening right now. So the focus for now is to go with the OSC sandbox down the road. Different securities. If the OSC and the sandbox says there's no way for us to go through that approach, we'll have to look into jurisdictions that are friendly with ICOs.
Sorry. My other question is, how do you plan to acquire your customers?
From a business point of view?
Yeah. So let's say you successfully ICO, you've got the funds, you can start. It's effectively a lending platform, yeah. So how are you going to? So
there's different channels, right? So one of it is working on proper partnership that will drive healthy leads to our platform, whether it's incubators or university entrepreneur programs, accelerators, or even VCs that have, for example, applications that came to them, but they think a revenue sharing product would be better than actually doing an equity deal. We want to drive quality deals into our platform. We're not a small business lender where we're going to have brokers shopping around, calling people, hey, do you want a loan? We believe that model is pretty much obsolete at this point, and you're not going to drive quality deals. I've witnessed it myself at IU Financial, where we had brokers just bringing any kind of deal and will default 2 days later. So one of them is partnership, curated content and marketing that will drive those companies to us through marketing and SEO efforts, and participation in conferences like SaaS North or any SaaS events out there or technology companies. Thank you.